Okay, I'm going to cover how to do options in Robinhood. Um, it's important to learn because, as you can see, my most recent option, I've lost 93%. So options, first off and foremost, the first thing you need to know, they're much more risky than other things. For just an example, we'll just use Alibaba. I'm not saying you should get an option or whatever, just do whatever you feel, do your own research. So we open up Alibaba, go to trade, and then trade options. So first, before we start looking at this, what an option is, it's essentially a contract that gives you the option to buy 100 shares of that stock at a certain price on a certain date. So, for example, here we have, it's for November 27th, and it's called a call. So what this is saying is, on November 27th, let's say I buy this $260 call right here. On November 27th, I will have a contract that says I have the option to buy Alibaba for $260. Also, just so you know, the contract is for a minimum of 100 shares. That's just how options work. So, the reason that this can make you or lose you some money. So today the price of Alibaba is $259. So it's possible you need that it can break 260, right, by November 27th. So let's say by November 27th, Alibaba is up at $270. Well, I have this contract that says I can buy Alibaba at $260. So that means I instantly get a $10 profit on every share that I buy. So options can be extremely powerful. However, each option, on the right you see $5.80. That's the price for this contract, for this option. So when I click here, and let's say I want to buy one contract, so that's 100 shares. Well, it's going to multiply $5.80 by 100, right? So we get $580 is how much I'm paying. That's a pretty big chunk of money. Robinhood's really helpful in that it will tell you your break-even price. It says to break even, I need to go 2.67% up from the current price. So two things to keep aware of as well. Robinhood, as far as I know, doesn't actually let you use the option. So you're just buying and selling the contract. Once your contract expires, you can't actually buy 100 shares of Alibaba. Someone else will buy your contract and they will buy the shares. Their platform just doesn't do that yet. So if I buy one of these, it becomes mine. The reason it's so volatile is because every move in price is basically exponentially displayed. So if the price goes up, well, then this price of the contract can go up because all of a sudden it becomes worth more. Let's say tomorrow Alibaba becomes worth $270. That means the contract that I have is already making a ton of money. And so the contract will change. Alibaba, you can see the $5.80, it went up 28% today. That's a pretty big gain for one day, but you can also have pretty big losses. So this is all for an option that's called a call. It means you think the price is going up. If you think the price is going down, click on a put. Robinhood's nice enough that it puts it in red and green for you. So it's the exact same idea, except for in this case, you're saying you think the price is going to go down. And so when I buy a contract for $257.50, I think that by November 27th, the price of Alibaba is going to be less than that, and it's going to let me sell 100 shares and make a profit. I'm going to be able to sell 100 shares at $257, regardless of what the current price of Alibaba is. It's also an incredibly powerful thing. If you think a company is going to tank, you can make a lot of money. If you think a company is going to go up, you can make a lot of money. But it's really, really volatile because today these all went down 30%, 27%. So prices can go up and down a lot. The further out you go, you'll see that all of these prices slowly go up. That's because you have a higher chance of making money. Because between now and December 18th, it's more likely to climb to $260 than it is between now and November 27th. Something else to look at when you pull this up, if you tap the little green arrow beneath limit price, it pulls up some stats. I don't know too many stats, but something to keep in mind is we're buying and selling contracts on Alibaba. So if you look, it says volume. Volume means today 8,080 people bought or sold this contract. Open interest 23,000 means I would assume around 23,000 people looked at this contract. Then implied volatility, obviously how volatile it's going to be. Chance of profit 32.8%. The Greeks, you can look up information online about them. They just tell you different information about investing. I'm not that serious about them yet. It's very easy when buying an option though to find some company that is not as well known and the open interest numbers or the volume numbers will be really low. You have to remember when then the time comes for you to sell your contract, people have to be interested or they're not going to buy your contract. So here's a sad example. So I bought LTHM. It's a lithium stock. I bought it, I don't know, several weeks ago. See at the bottom it says you can close out your position in this option, but you can't buy additional contracts. It's too late. I've had this for sale, this contract, since when? Wrong history. I don't know. I put it up for sale a while ago. If you can see, I have not done well ever since I bought this. No one's interested in buying this contract because it expires this Friday and it's worth basically nothing. Because I made a bad choice, a bad decision. So if you buy an option and no one ends up being interested in it, you're going to lose 100% of your money. Or on the flip side, if it works really well, buy an option. I had one the other week that I manually changed the price that I wanted to sell it to. I changed the price a little bit above market value because there was such high interest in this stock, and it still sold within a couple minutes. Or actually, no, I changed it below because I was scared. I changed it to slightly below market value. It sold really quickly, and then I had wished that I'd risen it because by the end of the day it was already worth more. So just keep that in mind. It depends on how many people are interested. Options are a great way of earning money. That big jump right there was from a really successful option. I think that one as well. No, that one was not an option. That one was something else. So keep it in mind and good luck investing.